So you talked about the lenders before. What are the interest rates from a first home buyer perspective? Are they paying more because they've got no service in terms of historical data for the banks to review?
Are you talking about the first home buyers?
Correct.
So it depends. So obviously when you're a first home buyer, your deposit isn't as great as if you're an existing customer with an existing loan. So the LVR, or the loan to value ratio, is going to be greater. So when that happens, a lot of the time the rate is slightly different because it's obviously going to incorporate the mortgage insurance fee. So yeah, that obviously affects the overall rate to the borrower.
And as a first home buyer, how do I reduce that mortgage insurance fee so I don't have to pay it?
You can either obviously tip in more. With your parents, or somebody that gives you a deposit, or a lot of the time you find that the first home buyers, or people starting to get into the market, they've got parents that may want to give them part of their equity in order for them to be able to get into the market.
So in that instance there's no cash transfer as such from the parents to the child?
It's basically an amount within the value of the parent's property that is used to obviously offset the loan to value ratio for the purchase of the consumer, or the first home buyer.
Yep.